Hello and welcome to Virtual Investor Conferences. My name is Phil Carlson, and on behalf of KCSA Strategic Communications, as well as our co-host OTC Markets Group, we're very pleased you've joined us for a fireside chat with GrowGeneration, one of the largest retailers and distributors of specialty hydroponic and organic gardening products in the United States. Their session will be moderated by Aaron Gray, Managing Director, Head of Consumer and Cannabis Research at Alliance Global Partners. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view the company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Darren Lampert, Chairman, CEO, and co-founder of GrowGeneration, which trades on the NASDAQ under the symbol GRWG. Welcome, Darren and Aaron.
Thank you, Phil.
Thanks, Phil. Appreciate it and look forward to moderating today. Thank you, KCSA and OTC Markets. So welcome, everybody. Again, my name is Aaron Gray, Senior Analyst at AGP, covering consumer and cannabis. I have the pleasure today of joining myself with Darren Lampert, CEO and co-founder of GrowGeneration. So very much looking forward to it. Hopefully we have some valuable insights for you guys. You guys can learn more about, very interesting story within the hydroponics and broader cannabis space. So with that, Darren, I'd love to kick things off and open it up to you in terms of giving some folks who might be newer to the story of what GrowGeneration is and the overall story, how it fits within the ecosystem of hydroponics and cannabis.
Thank you so much, Aaron, and always appreciate spending some time with you. We go back almost 10 years. It's kind of incredible. And GrowGen is celebrating its 10th anniversary this month. And it's been quite a crazy ride. Way back when, 10 years ago, this was $1 million business that morphed into almost a $430 million business in 2021. When we started back in 2014, our mission statement was very simple. We wanted to be the largest hydroponic chain in the country. And we got there after 6 years in business. GrowGen was growing 100% year over year for the first 7 years in business, going from $1 million, as I said, up to 2021. Up to about $430 million. And what do? We're the largest hydroponic chain in the country. We sell product to anyone from the largest MSOs to the small single state operators. We right now have 46 stores around the country, distribution, private label brands. But the industry has changed tremendously over the last couple of years. And we're seeing a mature industry. That tremendous capital restraint. Federal government has been an absolute disaster over the last couple of years, even though we do believe things are changing. And GrowGen has kind of pivoted. In the last couple of years, we've taken pretty dramatic steps to right-size this business after growing so quickly. We've gone from 65 stores down to 46 stores. We've cut inventory almost $50 million. We've cut expenses $30 million. But we've kept our balance sheet extremely strong. We have about $65 million cash. We have no debt on our balance sheet. We're sitting with about $65 million of inventory. But on the other side of that, we've done a lot of positive things to really right-size GrowGen and get it back to the growth days of old. And people always say, Darren, what have you done? We've right-sized our store count. The industry has changed dramatically and we're changing with it. And we've cut a lot of redundancies out of our store counts. But on the other side of it, we're starting to really spend more time on the R&D front and bringing new products to market. We've taken a private label division that was almost at zero. And right now it's about a 23% of sales and growing extremely quickly. We're bringing best of breed products to the market that are lowering growers' prices, hiring yields, and really giving them more consistency in their grow. And we believe that our private label brands can grow probably to about 35 to 40% of business, over the next couple of years, which really is extremely exciting for GrowGen. When we look at the way GrowGen's basic setup, we run through 46 stores right now, 2 distribution centers plus hubs around the country. We have a vibrant online division or e-com division. And we also have a benching and racking business that we've recently put up for sale that has been a quite successful division of GrowGen. Does vertical racking in the cannabis space, but also does back of room and kind of, certain business outside our space, but we've been quite successful with it.
Thank you very much for that introduction, Darren. So I guess things actually talk about, how within hydroponics, how it's tied to cannabis, right? Because there's been some correlation there. I know you have business outside of cannabis as well. Can you talk about the correlation within cannabis and also some of the other verticals that GrowGen and the broader hydroponics sector plays in?
Yeah, hydroponics is tied to this broader segment of an industry called controlled environmental ag. And controlled environmental ag is growing indoors. And growing indoors brings consistency amongst crops. You're growing, everything is computerized indoors, and you're usually doing it vertically right now. And one of the most important things in growing cannabis right now with the medical aspect of it is consistency. That, every plant is the same when you have the same genetics within the plant. You're also lowering cost in certain ways. You're taking the natural sunlight and you're using lights that, are more consistent. The sun only shines a certain amount of days. Growing outdoors, you have certain elements within the weather that changes the crop, changes the growth. But when growing indoors, you don't have that. And what you're starting to see right now is the cannabis space, and the is really the leader right now in shaping some of the hydroponic growing indoors, which you're going to see in the future. And there are many states around the country, even from a food side of it, that just can't grow a crop outside, and they need to grow indoors because the weather's not there. They don't have the soil, they don't have the water. You're usually saving about 85%, water usage growing indoors. Even though you're using, electric and certain utilities. But what you're starting to see in the hydroponic space is the costs are starting to come down dramatically. That there's been such advances within our industry on dehumidification, lighting. You've seen double-ended lighting, which was extremely taxing on the energy side of it. They've gone to LEDs. You're seeing dehumidification right now becoming much more user-friendly, and also, again, using less electricity as it goes. But what people really are seeing is you're seeing, higher yields indoor, more consistency, and much better crop that's bringing in, more money per pound than you're seeing on the outdoor markets. And we do see this starting to morph it into greenhouse growing. And greenhouses have become much more complex in this day and age also. You're starting to see it really coming out of Europe right now. If you ever took a drive down in Amsterdam and you went to the gardening district down there, there's miles and miles of greenhouses. Hopefully one day you'll see this movement in the United States, and in certain states that just can't feed themselves.
No, absolutely. And on that note, in terms of the one day, let's talk about GrowGen specifically. How do you believe that GrowGen is differentiated and best positioned versus some of the competitors to win long-term within the hydroponics industry as you wait for these growth catalysts to come to fruition?
I look back and I always, I equate it, and people always look at me, I'm nuts. But when you look back 30 years ago or even 40 years ago at the hardware stores, there were hardware stores on every street. You ask a kid, you ask your son or your daughter to go to the hardware store in this day and age, they don't even know what a hardware store is. There's Home Depot, there's Lowe's, there's Ace. And what you're starting to see in the hydroponic space as the industry continues to grow, the growers are getting bigger. The MSOs, the large single state operators, the small little mom and pop stores cannot service the size and scope of what these individuals need. And when you look at GrowGen with 46 stores and distribution and almost 1 million square feet of space around the country, we're able to do that. We have credit. We have a balance sheet. We give credit to our customers. We're reinvesting back into the business. But I think one of the differentiating parts that you'll see at GrowGen, besides our staff, that is, basically 350 growers. They all come from the industry. They know how to grow a plant. But you're starting to see GrowGen rolling out best of breed products. We just launched Drip Hydro. We launched the liquid brand about a year ago that's been quite successful. And we recently have launched the Drip Powder brand. which lowers costs for growers, brings better quality. It's in 350 active trials around the country right now, and those trials are starting to equate to dollars. Trials are starting to come to an end. We've had unbelievable results coming out of our drip hydro powder brand. Same thing with Charcoal. We have one of the leading we have one of the leading cocoa brands in the market right now, and starting to innovate on that side of it. Same thing with the Harvest Company and our ion lighting. So right now, GrowGen has taken a company that had zero private label 5 years ago. It's about 23% of sales. We believe it comes out this year somewhere in the 25 to 27% of sales and into the 30s next year. But these products are lower cost, bringing more consistency to the growers, I think better quality to the growers within their plants. And we have the staff to do it. And so we've pivoted from opening stores, really, Aaron, to start investing back into the company, even on the credit side of it. All our larger MSO customers and large single state operators and just commercial customers have credit with GrowGen. We're investing in their building of facilities. We're giving them credit to help through some of the harder times. There's times, in between harvests where some of the growers don't have money and they need to rely upon the sale of some of their products to pay their bills. And they're our partners. And what we see right now is there's much less risk in the market. From about 5-6 years ago, when people were waking up in the morning and decided they want to be growers. We do believe that most of the groups that have made it through the hard times are here to stay, that they've learned how to manage their business much better as we have. And they become customers of ours for life. And we are their supply chain. And no other group out there has the breadth, the size, the capital, the inventory, and really the distribution and accounting that GrowGen has. So, when you look at, the hardware stores of old, we believe that, the Home Depot, Lowe's scenario fits pretty well in what we're doing right now with GrowGen.
No, absolutely. And you touched on your private label initiative. That's been a big one for you since you first launched it roughly 5 years ago. You talked about it being 23% of your sales today, growing to 30% in the near term. Can you speak more to what really resonates with your consumer base? You mentioned price and consistency, but something that's a little bit different with growers that we've spoken to in the past is it can be a very big hurdle to break through because they're used to the products that they're using. But then once you do break through, you have a lot of stickiness. And you mentioned your lifelong customers that you do have within that. So can you speak to what's really resonated with the private labels? And once you've broken through that hurdle, kind of the stickiness that you then have with the customers to build credibility, not with those brands, but also the new brands that you plan to introduce thereafter.
I think one of the interesting parts, because of the scope, and really the size of GrowGen and really the different states that we're in, we're in 18 different states right now, but do business in most. A lot of GrowGen's R&D is done through commercial customers of ours. They're done at the farms, they're done at the cultivation, indoor and outdoor. So when GrowGen comes up with products, we have groups out there that demo these products and trial these products for us. And we tweak them along the way and, with science and continual testing. But when we're ready to launch, we have the marketing division of GrowGen, which is always quite important. And people always ask, why keep the stores, the amount of stores and the amount of states. But our stores are marketing divisions for GrowGen and also for other manufacturers out there, products that we carry. We have wonderful relationships with most of the manufacturers out there. They have end caps within our stores. We sell to our customers what they want. But, we are probably the only group out there that has the ability to really R&D products, in the market and through the growers and, some of the larger ones out in the country. And it's something that's really important, like anything else, growers are a fickle group, and it's probably, when you look at nutrients, it's the hardest, I think probably the hardest, product for people to change. There are certain other products that are quite easy, but nutrients are difficult. And it comes with a lot of testing, a lot of trials. But we have a head start because a lot of guys have tried the products already. And it's word of mouth. We do a tremendous amount of advertising, on our Instagram page, our Twitter pages. And people are understanding what our products are and what they do. And it's a lot of word of mouth out there. And we have a dynamic sales force at GrowGen. We have a great commercial group out there that's, pounding the pavement every day. And, but like anything else in the long run, the product has to work, and it has to work well. And, we believe that we are putting best of breed products into the market. And we do believe that some of these products have crossed over into the IGC world, which as we all know, the TAM is much bigger. So we have hired some sales guys that are, pushing some of our products into the IGC world. We are starting to make penetration, albeit extremely small relative to our sales right now. But we do believe that, the future of GrowGen is both in hydroponics and cannabis, but also in the gardening space.
Appreciate that color there, Darren. Within the cannabis space, that GrowGen is correlated to, a lot of the momentum has been state by state, even though we wait for federal reform, which we'll get to in a moment. But on the state by state side, about 24 states, adult use legal today. Ohio should be starting adult use sales this month. Florida, a notable state, could be legalizing adult use sales this November with the ballot. That'll be on election day. So how does new states opening up adult use or medical impact GrowGen, and how does that broaden the TAM for you guys?
Different today than it was 5 years ago, or 7 years ago. Back in 2019 to 21, when states went whether medical or rec, there was an incredible rush to build. There was an incredible amount of money coming into the market. Those days are done. So what you're starting to see right now is much more controlled building, and much more controlled growth, I think, in new states coming on board. And the one thing that we're starting to see is new states coming on board. They're late to the party in certain ways. A lot of the individuals living there are consuming cannabis through different places and getting them from different places. So the growth has been certainly slower, and we haven't had that same rush to go build big stores in new states coming on board. We know most of the growers going into these states. So when new states are opening, you're usually finding growers coming in from other locations, whether it's an MSO or a single state operator that's going into a different state. So you're not seeing the kind of pickup that we did in the past when new states are coming on board. Albeit there's new business out there. We'll be in New Jersey speaking at Benzinger in a couple of weeks. And we're doing new projects around the country. But a lot of these groups know us, and, we have a commercial group out there. We have a racking, we're doing a lot of vertical racking out there. We have CAD designs coming from GrowGen, and we help build facilities. So, through that, we usually do have, our hands in a lot of different pots. But opening stores in new states right now, you're not getting the ROI that you used to, Aaron. It's just moving much slower. And a lot of it has to do with money. Like we're managing our balance sheet right now, a lot of the MSOs and our customers are managing their balance sheets too. And they're not building as quick as they used to. But on the other side of it, a lot of these facilities were built between 2019 and 21, and there's refresh cycles coming. So besides new facilities coming on board, you will see a lot of facilities going out there right now that they're going to need a refresh in their lighting. They're going to need refresh in the dehumidification and control systems. There are new equipment coming to market that's more energy efficient than it used to be. So with money coming back into the market, when it comes, I believe you'll see a lot of building, both refresh and new facilities coming on board, whether they be old states or new states coming on.
Yeah, absolutely. And that's a great segue into the next question I have in terms of what could potentially bring more capital back into the space. And with that, federal reform, the potential reclassification of cannabis from Schedule 1 to Schedule 3, right? The Department of Justice and Attorney General proposed moving to Schedule 3. It's currently in the comment period. So we wait for comments to end July 22nd, I believe. And then we'll be waiting for the time to when a final rule comes. Now, one of the biggest impacts that we expect from Schedule 3 is the removal of 280E tax, right? So in layman's terms, a lot of these operators are paying taxes on gross profit, not being able to deduct SG&A. Moving to Schedule 3 will allow operators to make those deductions and provide a lot of direct cash savings. So with that cash, they can use it for a number of things. and one of those being CapEx for either building out or the refreshes that you just mentioned. So can you speak to how the reclassification of Schedule 1 to 3, once finalized and effective, could have an impact on GrowGen and its client base?
We believe it'll be the biggest thing that hits this industry. And, I still do believe with the rescheduling, from 1 to 3, you will see, some form of SAFER Act out there that opens up banking and that opens up banking and also capital to the market. But the size and scope of 280E going away is incredible. It's anywhere from $1.5 billion to $2 billion. Some people say $1 billion to $2 billion, but it's a number that that the industry hasn't seen, and it'll change P&Ls of most of our customers in a very advantageous way to us. It'll help them go out and refresh their facilities. It'll help them shore up their balance sheets. And, one thing that most people know right now is most of the balance sheets of cannabis companies are upside down. They're paying an extremely high amount of interest. That coupled with 280E, it's next to impossible to make money. And GrowGen is lending money out to the industry. So it shores that up it shores that up and will give us much more confidence in even lending money to some groups that we may not right now. But I think that if it's done by the end of the year, hopefully they don't have to pay their 280E tax in 2024. That's not no one really knows that right now, but it'll be the largest thing that comes into this industry. I believe that, the refresh and building cycle will boom like you saw back in 19 to 21 that drove tremendous growth. And GrowGen will be the leader out there from our side of it. You are seeing many small stores close around the country on the hydroponic side that can't afford to stay in business any longer. And, GrowGen is best positioned both from our private label brands, from our relationships with our vendors, both on lighting and dehumidification. What you've seen from GrowGen even recently is, we've been signing some exclusive deals with some vendors out there, opposed to going through, distribution. We're going direct to most vendors out there. So, we wait for that day, and, we believe that, you will see a tremendous boom in the hydroponic space through it.
Yeah, we're certainly looking for that rebound as well. And we think rescheduling and removal of 280E could be the catalyst to do that. But for GrowGen, right, you talked about some of the struggles in the industry. Certainly it's impacted GrowGen along with that. But you've been on a relative basis, one of the better performers, right? You have over $60 million of cash. You have no debt. You're guiding to a slight EBITDA profit at the midpoint for 2024, all in a very tough environment, right? And it's an environment where there's a lot of mom and pops who are in a much more difficult position. So can you speak to how GrowGen has been able to take advantage of the difficult environment and been in a more relatively strong position to be even stronger once the industry does rebound? And I think you alluded to it already, maybe going more direct to some manufacturers before, but just any other opportunities out there that you believe because of, your relative position with a strong balance sheet and rough profitability or breaking towards it at the end of the year, how it positions you to get stronger for when the rebound does come. GrowGen will come back in an even stronger position as a market leader in the industry.
Yeah, I think we've done what a lot of bigger companies have done, Aaron. Whether it's our industry, whether it's a plant-touching industry, during hard times, you make hard decisions. And, those hard decisions were, shedding 21 stores, and probably, we're probably going to shed another 3 to 5 stores this year, and really better understanding the industry. So I think that, through hard times, whether you want to call it was almost a depression within our industry, I think we learned a lot, that you don't need stores within 30 miles of each other, that, distribution is extremely important right now, and knowing your customer is extremely important. We do believe that, GrowGen is more business to business than business to consumer. And I think that's where the industry is going. We were of the opinion back when that it may have been a little more business to consumer. But, we are basically, GrowGen will always be business to business. And, that'll be our main steadfast. And that's how we're going to make money. But during the hard times, we built out a great private label division that we believe will continue to bring business to GrowGen. We built out a decent distribution business, and we are distributing our products into other stores around the country. We don't need to be everywhere. And I think we've learned, that through the harder times that, because we are a public company, our costs are much more than, some of the smaller hydroponic stores out there. And our margins, again, we need a certain amount of margin to pay the bills. So, we've decided to cut store count and really concentrate on things that are going to bring money, and earnings into this company and really get the stock back moving where it belongs. The company right now is trading basically at cash and inventory. And we do have 46 stores, and we have an incredible private label division that is doing, upward of $40 million in business at very high margins. That's paying really for some of the other issues we have out there. Last quarter was our first quarter of same store sales growth in 11 quarters, and we believe that continues. So there's so many positives that we see, that we've rebuilt the business. We've taken a mission statement of just being the largest hydroponic store chain in the country. That's just not what we want to be anymore. We believe that we have the ability and really, I think, the knowledge to put some best of breed products out into both markets. We're building out our commercial team. We're building out our distribution team. So we're building out different parts. We're investing in the business. We were always investing and running and buying stores, and it was a rush to get to 100 stores, 200 stores, 300 stores. But that's not the rush anymore. The rush is making GrowGen the best distribution company out there, the best private label company out there, and the best company to service our customers and really lower their costs of growing. And hiring their, getting their yields higher and getting their quality higher, through products of GrowGen or products of some of our, some of the bigger manufacturers that we deal with. So I think that GrowGen really, opposed to investing in everything else, we're investing in our business, we're investing in our customers, we're investing in distribution software, and building something that's going to last for many years to come. It's hard to believe that we've only been in business 10 years. And you've seen a business in 2014 that did $1.5 million of business that got up to $450 million, and now is at that $200 million mark. So we've seen the ups and the downs. And I still say it that, I'm still leading this company after 10 years. And, Michael Solomon, our co-founder, is still with us and working harder than ever. And it's an incredible thing building a business from zero to where we built it. But it's going to be more fun rebuilding it. And I think we're pretty far along of rebuilding this company, reshaping it. I think our cost structure is where we want it right now. And I still think there's a little more room within our cost structure to get it down. But during good times, you spend. And I think that, a lot of the growth is, a lot of the spending is masked by growth. But now people are, kind of becoming much more deliberate on every single line item on their income statement. And I think that's where we are right now. So I think you're going to see great things from GrowGen in the future. I think you're going to start seeing, the return to growth, out of this company. And I think we're going to be a leader in the industry. And I do believe that we're going to make our mark on the other side of it in the lawn and garden industry also.
Mm-hmm. Yeah, fantastic. So I think we are coming towards our end there, Darren. I'd ask you for closing remarks, but I just think you did a phenomenal job right there for it. So, but I'll pass it out to you if you do have anything to add. I think you did a great job just with ending there. We've known each other nearly a decade now, so having seen the growth and what you guys have done over at GrowGeneration, having first covered the company when you're on the OTC stock, and then becoming one of the leaders, in cannabis, being on the NASDAQ and thereafter, getting institutional investors within the space and your stock. So, having seen that growth and what's to come going forward, looking forward to continuing following you in the story. But before I close things out, just if you have any other closing remarks, I'll go ahead and pass it off to you.
Like always, I want to thank our shareholders for some tough times at GrowGen, but I do believe you'll see good times to come. Also, always want to thank our staff. I think we have the best staff in the country. They have stood by us through thick and thin, and have gone through many challenges. And again, I do believe we have the best staff in the country, and I thank them every day. And I also want to thank our customers. Our customers are the lifeline of GrowGen, and like we always say, we are getting better every day, and we strive to be the best, and we will get there. But and also to our shareholders, thank you, and everyone enjoy the summer. The summer's coming, so enjoy, and we look forward to sharing our second quarter results in the beginning of August with everybody.
Thank you very much. Darren Lampert, CEO and co-founder of GrowGeneration, trading on the NASDAQ, ticker GRWG. Thank you so much for joining me today. Thank you, KCSA and OTC Markets. We look forward to it and hope you have a great rest of the conference.
Thank you, Aaron, and also thank you.